morning, everyone. I'm Mackenzie Babb, External Affairs Director at the Kenan Institute of Private Enterprise at UNC-Kenan-Flagler Business School, and I'm pleased to welcome you here today. This marks the 7th in our series of press briefings on the business and economic ramifications of COVID-19. And today's conversation will focus on the impact on retail and commercial real estate. Glad that you could join us. And before we kick things off, I'll walk you through how today's conversation will go. I'm going to hand things over here in just a moment to our panelists. Each will introduce themselves and offer some insights and information from their own individual areas of research expertise before we hand things over to you during the second half of the conversation. Right around the 30-minute mark, we'll open Q&A. For reporters who are joining us via webinar, you are welcome to submit questions anytime using the Q&A function at the bottom of your screen. So you don't have to wait until the second half of the call, although you can. For reporters who are joining us by phone, you are welcome to submit your questions to me via email. You've all got my email. You hear from me plenty, but as a refresher, my email address is mackenzie_babb@kenan-flagler.unc.edu. So with that, it's my pleasure to hand things over to Professor Andra Ghent. Professor Ghent is the faculty advisor to the Leonard W. Wood Center for Real Estate Studies here at UNC-Kenan-Flagler, and very happy to have her take kicking us off today. With that, Andra?
Great. Well, thanks so much, Mackenzie, and thanks to all of you for joining us. So before I dive into the implications of COVID-19 for retail property, I want to first give some context. I want to make sure that everybody understands exactly the magnitude of the employment losses we're seeing in aggregate right now, and particularly in retail. So prior to COVID-19, about 16 million people in the US worked in retail jobs, and another 10 million worked in food and beverage. So combined, this is about 15% of US workers. Okay, since mid-March, we've been seeing about 5 million new people a week file for unemployment benefits for the first time. In total, we have about 26 million newly unemployed workers in the US since mid-March. We don't know exactly what fraction of those newly unemployed 26 million people are from retail and food and beverage, but my guess would be at least half. So this is really unprecedented. So just to put this into context, the highest level of weekly new jobless claims during the Great Recession was about 650,000. So we're seeing 5 million a week right now, and worst recession we've had since the Great Depression, we were seeing 650,000. So this is literally an order of magnitude worse in terms of the job losses than the Great Recession or any other post-World War II recession. So what's caused these losses? So I think it's important to understand that the losses started before these stay-at-home orders. So the decline in bricks and mortar shopping, it's not just because people are being forced to stay at home. We were seeing steep declines in visits to businesses in most US states before stay-at-home orders were announced or came into effect. So even after they were announced, you might expect, well, was everybody rushing out to get toilet paper and all these other goods they wanted to stock up on? We actually continued to see declines before they were announced. That's not to say that the stay-at-home orders don't have a place. They obviously do, given the externalities we see in epidemics. And they certainly have exacerbated the decline in shopping. But I think it's important to understand that people were choosing to stay at home to protect their health. And so pandemics themselves, regardless of even if the government does nothing, they have some pretty negative effects on the macroeconomy. And so even if every stay-at-home order were lifted tomorrow, retail is not going to immediately bounce back. We're going to need people to feel safe going into bricks and mortar stores for the bricks and mortar retail to bounce back. Now, you may, of course, see some temporary surge from pent-up demand immediately after reopening. You know, I could see that going on for a week, maybe 2 weeks. But to get a really sustained recovery, people have to feel comfortable and want to go to stores and restaurants again. Some people would feel comfortable doing that fairly quickly. Older people, it might take years for it to be safe for people over 65 to really want to go back to their old way of life, until those people really need us to have herd immunity or a vaccine, unfortunately. So what this does overall, it accelerates a trend towards online retail. So right now, online retail is nowhere near large enough to compensate for the decreases we've seen in bricks or mortar retail. There's also very little incentive for a laid-off barista to become an Amazon warehouse worker right now. Through the end of July, laid-off workers are getting supplementary uninsurance protection through the CARES Act. So most of them are actually seeing their wages at least replaced. So there's really very little incentive for these workers to switch rapidly into becoming Amazon warehouse workers or other online retailers. So online retail already had significant capacity constraints. So we're not, and the workforce issues are going to exacerbate that. And of course, there's also the issue of consumers spending less online. They don't do maybe as many of those impulse purchases. Certain items they really do want to try out, maybe especially clothing stores, they may be especially hard hit. People might not feel comfortable with the fit guides online. They may want to see the fabrics themselves. Longer term, this will force older households to adopt existing technology. So it's not that the technology wasn't around before, but a lot of older households didn't really feel comfortable using it, and so now that they're forced to, this is going to accelerate that trend, because the sort of older households were the holdouts in using online retail. So in some sense, this accelerates an existing trend towards online retail. Short term, as restaurants remain closed, this is obviously very good for grocers. But if a lot of the shopping in grocery stores is being done online, then we have this problem where they may move away from malls because they don't need that prime location anymore. And unfortunately, that's bad news for the inline tenants throughout the rest of the mall. So again, not great news for malls. Good news for home improvement and hobby stores. People have some time on their hands. I think the worst sector is probably restaurants. And the reason is that, as you've probably heard, some states are saying, well, restaurant reopenings is a phase 2, as long as they only have 50% of capacity. But the vast majority of restaurants, that's just not a viable business model for them. They operate on razor-thin profit margins, 2-3% profit margins. So to say you're at 50% capacity, it doesn't make sense to open the doors at that point. Maybe some of the casual dining chains will do okay, where they have a lot of takeout as well, and they already sort of cater these big spaces. But the sort of boutique, unfortunately, small business restaurants, they're really, I don't see them reopening until phase 3. And we really just don't know when phase 3 will happen. And I'm very fearful that a lot of small businesses operating restaurants can't survive that long, especially if they aren't able to get these SBA loans. So with that, I'm going to turn it over to Katrijn, who's going to tell you a whole lot more about the shift to online retailer.
So, good morning, everyone. Nice to talk to you this morning. I'm Professor of Marketing here at Kenan-Flagler. Study retailing in many different formats, but obviously today I'm going to look at the big retail transformation that is going on and the impact of COVID, obviously through a marketing lens. And obviously, as Andrea already sort of mentioned the word is COVID is not really changing anything fundamentally. It's mainly accelerating things that have already been going on. And what I'm going to do is really put it somewhat in context and try to sort of reflect on, who's going to be, in a better position to sort of address a couple of the additional layers of distress that are being sort of put into the equation, and who will be, well, maybe dying at the end of this ride. So let's first look at, what's been going on in retail industry, because I think that's where we have to start. Nothing in retail sort of started going wrong in March. It happened long before, because like most of you reporters, so you've been reporting over the last couple of years that everything has been going from doom to gloom. Almost every week you get reports about retailers going out of business. Last year, I think it was about 9,000 stores, more than 9,000 stores that were closed down. First couple of weeks, January of the 2020 alone, there was already more than 1,000. So that actually already sort of suggests an increasing pace of store closure. And that was before COVID took place and started taking over the planet. So the natural question was the store already dead, full stop, before any of this started? Now, what I want to do in a couple of minutes, of course, is just to make a case for the store, because no, I don't think that the store is dead. If anything, even retailers that used to be 100% digital, they will increasingly need a physical footprint. But still, that store 2.0 or even 3.0, if you want to call it, the post-COVID store will need a major overhaul, meaning that new formats, footprints, and locations are required to be successful in the retail world. So, and to put it in a couple of words, if I would have to sum it up, it's really the big box is dead, long live the small, lean box. So let's quickly reflect on what brought on all this distress long before COVID started to hit the world. Well, obviously, if we have to sort of like point in someone's direction, everybody will look at the Amazon or the Amazons of the world and say, you know what, it's online stole the physical sales. Still, want to remind you, as probably most of you are aware, at this point in time in the US, it's about 15% of retail sales that goes through online channels. So most of you are somewhat surprised, or not you as journalists, but if you just talk to the world at large, they are somewhat surprised. Obviously, once again, COVID sees that there is an increase, there's an uptick, also as Andra discussed, in online ordering. Still, it begs sort of the question, like, why something that was sort of like steadily growing to 15% completely disrupted the retail industry full stop. And then the problem is not just that part of the sales have shifted to the online channel. It is main problem is that the Amazonification of the world changed us as consumers. Because what is the Amazon model, if you want to? It offers you everything, endless aisles, all the time, with minimal effort. You don't have to put a lot of search to find whatever quirky need you may have. You can do it from your couch. You actually don't have to sort of lose any time. It is all convenient. Most of the time at really nice prices, quite low, not necessarily the lowest. And also, we know you virtually have nothing to pay to actually sort of get those goods. Well, seemingly. There is, of course, the Prime type of subscription, but still, you actually sort of have the impression that you don't have to pay. So what is the end result of that? Actually, a sort of like monster was created, if you want to, from a consumer point of view. We actually now dealing with consumers who want everything, everywhere, all the time, and worst of all, we have zero willingness to pay. So how do you cater to that? So how do you, as a brick and mortar retailer, cater to that? So that's where it all started. That sort of like desperate need to sort of try to sort of pick holes in that business model and get that consumer back. So what is then what you have to do? You have to look at, hey, you know, what are the flaws of the models? And then, you know, you can sort of like pause for a second and think like, hey, do consumers really get everything they want all the time, right here, right now? Well, they still don't get the products right here, right now. And that is, if you want to, and that sort of touches upon fulfillment, and Adam obviously will talk more about that later on, but that already gives you somewhat of an idea of the Achilles sort of heel of the entire, let's call it, classic Amazon model. Yeah, because, hey, we still actually sort of are not completely satisfied and fulfilled. We also don't necessarily get the products that we really want because, you know, pictures can only tell you part of the story. Hey, when it arrives, it may still be a major disappointment. So once again, if you actually sort of know that, you as a classic brick and mortar retailer, you can think, you know what, guys, I can actually do better. I can sort of, if I allow you to order online, integrate that part into my business, you can actually still get the products so much quicker because you know what, I do have a perfect little distribution center right around the corner that has the products available. It's called the store. And that is where the entire renaissance of the store came about. Because if you start combining that online ordering and sort of like the physical delivery, if you want to, the physical delivery, we create the omni retail type of setting, which may help once again to get part of those online orders back. Still, that requires a couple of things. That's a very big assumption that consumers still needs to get to the store, willing to store. And that's where they had to start reinventing the store long once again before COVID took over the planet. And then one way of thinking was, you know what, if people don't want to come to that big box that is somewhere on the outskirts of town, let's bring the store to the consumer. And this is where we have to enter that small box concept. Because what is it we're going to do? We're going to come up with a box that actually, instead of having an online endless aisle, we're going to have a very nicely curated assortment, curated, and that fits your need in your particular market. Instead of actually sort of putting a lot of stuff in that store, we're going to give you a concentrate on services, picking up, returning, consulting, those type of things. We're going to give you a frictionless experience, mimic what you see online, register free apps to help you search, blah, blah, all that typical types of things. And if you actually then think of that, we're also going to sort of like go to locations. That is where you see that the completely different need for locations starts so much. We're going to move to locations where you actually live. And once again, that's what lots of retailers have been doing, the Targets, Nordstrom, Lowe's, you name it. And even Amazon, this is where Amazon was sort of started to realize this may work for us as well. Even trying to see how far they can stretch it. Do you still actually need to offer a product on the store floor? Let's go to the entire showroom type of thinking. That's also where Nordstrom started to borrow from the Bonobos type of playbook, experimenting with those type of thing. Going to flexible locations, using click and collect services away from the store, going to remote distant locations near highway exits, playing around with vending type of concept where retailers are Uniqlo were trying to see whether they could sell you shirts, for instance, and jackets through vending machines in the airports. And also coming from Asia, not here yet, are the completely unmanned type of mini, especially grocery stores that can literally pop up on the sidewalk. Almost like, is it a store? Is it a vending machine? We don't know. And as you can see, that small store allows you to literally follow the consumer wherever you are and allow people to shop wherever they want to. And that's perfectly integrating online and offline. Now, what about the big store then? So what do we do with that? Sometimes there's nothing we can do with it. And that's why you see that some of these stores are closed or completely transformed into distribution centers. And that's where, once again, Adam comes into play. But then once again, for those that stay open, we still need to give people a reason to come and to visit those stores, to create traffic. And that is where you once again see that lots were playing with, we have to create experiences, we have to create, social hubs if you want to, like office, like for instance, Staples was actually, instead of putting a lot of, once again, product on the store floor, creating these co-work type of spaces. Walmart's investing a lot in health services, really creating these mini health hubs. So once again, experience social. And of course, then COVID hit. So once again, that is something that is a problem, because you can see that all of these things are very, investment heavy. Demand outcomes are quite uncertain. It's very much trial and error. You really don't know a priori what's going to work and what's not going to work. Then, of course, you are already probably, somewhat half in distress. If you then have to close your stores, it may all come falling apart. So then Corona came along. And if you then look at these non-essential stores, if you want to, the only thing that they still had left is their online sale channels. And yes, they sort of obviously, as we said, virtually integrated everything perfectly. But that still means that you have to now try and make all your sales from what people are putting in online. And one thing that we do know is that it's still notoriously hard to, get impulse and unplanned purchases going on. And every retailer needs that. So what does that mean? You will never be able to replicate whatever you can actually sort of make through a physical store print in your online channels. So once again, if you were already quite at risk and you had a lot of investments with a long-term type of focus, this probably was the proverbial last straw. So what is it that we then see is that the industry shakeout that was going on and that was expected to take place between 5 to 10 years is almost happening in a matter of weeks. Still, that does not mean that everyone is equally vulnerable. And once again, Adam will talk more about this. But I want to sort of circle back to my earlier comments and sort of say that the ones that mainly invested in, follow the consumer type of thinking, really taking the store to wherever the consumer needs, investing a lot in frictionless type of environments that make your experiences easier, whether that's with technology, touch-free type of interfaces, all these different types of things, click and collect, well, probably they are in the better position. because they are actually now in a position to address current needs, but also future needs. Because as Andra said, people will not sort of like instantly switch back to the way they were behaving before. There is fear, there is uncertainty. So obviously all those type of investments will pay off, and you will see more investments along those lines. Okay, so just finally concluding. So what is it with the ones that were relying a lot on social and experiential? Of course, yes, they will have a hard time. So once again, does that mean they have no future? And as I said, we're all human beings with, lots of social needs, and we've been deprived when it comes to our senses. So those needs will not change. They're very intrinsic. And even before COVID and all stay-at-home type of orders, loneliness was already considered to be one of the most important social issues. So once again, that means that there is an intrinsic need. And from a marketing point of view, an intrinsic need means that there is potential. However, it will take time before we can get back to normal. And for some, that will be obviously too little, too late. And now I will sort of hand over to Adam, who will talk more about everything from the more supply side.
Hi, everybody. My name is Adam Merserea. I'm professor at Kenan-Flagler in the area of operations management, where a very, very simple model of a retail store is where inventory, consumers, and store associates come together. Katrijn talked very nicely about sort of the consumer side in particular, and I plan to look a little bit more at sort of the inventory and sort of the labor aspects of this. First, I wanted to invite everyone to sort of take a moment and put yourself in the shoes of kind of a retail operations manager or supply chain manager right now. In the world of operations management, uncertainty and variability are always bad words, right? So in terms of delivering product, doing it with predictable demand is what everyone wants. And obviously there's very little of that. There's very little predictability going on right now. It's very hard to find a retail sector that looks similar to what it did kind of pre-COVID. But I think it's worth recognizing there's a couple of very different realities in retail right now. So those retailers experiencing a plunge in demand and other ones seeing a surge. And so as a quick case study, on the positive side, take the grocery industry as a case study. That's come up already a couple times in the remarks. Grocery retail sales from February to March are up 26%. And as a bit of context, the largest monthly increase in the last 3 or so years was 2%. So 26% is sort of a generational increase in demand, and that would put a huge strain in any operation. And in particular, these grocery stores are facing a number of operational challenges at the same time. So one of them is that supply chains are set up for steady and predictable consumption. The poster child for grocery products these days is toilet paper, which in the normal times is the most boring and steady of all products. And yet we're seeing massive surges in demand for this product. That supply chain set up. It's clearly not set up for that. We have supply chain disruptions interrupting the inflow of products. We have a vulnerable frontline workforce. We have stressed and unruly customers who, as Katrijn mentioned, are now coming with suddenly new expectations and needs. One of them that I've been following is the hasty expansion, or in many cases, the first-time implementation of what we call last mile order pickup and order delivery services, these are very challenging things to pull off in normal times. So one estimate is that to assemble or pick your order at a grocery store costs the grocery retailer about $15 per order, which is a massive amount of money considering the margins in the grocery industry. And I would think it's fair to say that up until COVID, online grocery shopping was sort of a curiosity. 6.3% of grocery spending was online pre-COVID, and of that, about a third of that was all from Amazon. So some retailers are doing better at this than others, but I think a lot of retailers are sort of learning this sort of on the fly. And then, of course, on the other side, when things come back to whatever normal looks like, what happens to stockpiled products? So a retailer may be averse to setting up big new processes and supplies. If, for example, on the other side of this, we are all flushing out the toilet paper stocked in our closets and attics, and no one buys toilet paper for several months to come. On the negative side, I think one case study is the apparel sector. So clothing retail sales, taking the February to March timeframe, were down 50%. Probably expecting more drops in April once that data comes out. And obviously, in many cases, these retailers are largely sort of shutting down. a key responsiveness metric in the apparel industry is speed to market, essentially the lead time taken from the design phase to having an item in the store. And you can imagine the longer a retailer's lead times, that means the more inventory is stuck right now in a supply chain that may be shutting down, or where the demand just is not going to materialize. And so for an apparel retailer, a typical production logistics lead time, this is just the production and logistics phase, is about 4 to 5 months. And so if you think about what that means, it means that merchandise that was ordered back in December, I know December seems like a million years ago right now, merchandise ordered back in December is now arriving at distribution centers right now. There's probably little demand to meet that inventory, and it's essentially perishable. I mean, we're talking about sort of summer and fall products that sort of may not survive until the next year. At the same time, this is now the time for retailers to be looking out months into the future. So, for example, planning for the holiday season coming up in 2020, and I think a reasonable question to ask right now is, will we see anything on the shelves kind of come Christmas time? Katrijn mentioned a little bit about which retailers will weather this best. On the apparel side, I think most apparel retailers are still sort of ordered on a seasonal cadence, right? So this is kind of like 2 main orders per year. So a lot of apparel retailers are in the same boat. And I think a lot of the retailers who experience difficulties are unfortunately the ones who are struggling before, the ones who've been slow to implement sort of online and omni-channel strategies, those with less responsive supply chains. There was a McKinsey study looked at vertically integrated retailers. These are sort of the H&Ms of the world, or Inditex is a company I've done some work with. They have much, much shorter lead times. And so you can imagine they can sort of wait longer for some of this uncertainty to sort of bear out. In terms of long-term impact, I totally agree with both the speakers who've said so far that we sort of expect an acceleration towards model changes that we've already been seeing happening in retail. So these are, obviously intensifying pressures to do things like omni-channel strategies, to collect data for better forecasting and logistics, some automation in the store. So self-checkout is obviously big right now. And obviously, I think the big retail buzzword of these times is the word convenience. So a move towards convenience in terms of online shopping, order pickup, order delivery services, things like that. We'll probably see simplified supply chains. So I think more nearshoring, reshoring, vertical integration, all in the name of sort of improved speed to market and more responsiveness. These are obviously things that retailers were striving to do before COVID, but at this point, these things become sort of an absolute necessity. I do think we'll see some damage to the retail sector. The New York Times had a sort of ominous article last week about the death of the department store, which made some great points. I think the big question is, will this crisis kind of complete Amazon's march to retail dominance, right? We may very well see some consolidation and new structures in the industry. In terms of opportunities, I think one that's interesting is we see a renewed focus on retail labor force, right? So we see some signs of retail organization, labor organization at places like Amazon and Target, renewed attention on the trade-off between revenues and worker safety, and I think some of that may sort of persist after the crisis is over. So the thing I'm most interested in and almost sort of optimistic about is the idea that we may see some aggressive innovation. So we may see, obviously, Katrijn talked some about things that customers value about the in-store shopping experience. So this is instant gratification, the shopping experience, ability to touch and feel. And I think retailers are going to look even more for ways to create things in their physical stores. A couple things going on, things like robots monitoring store shelves. You can increase customer service without adding labor costs. The showrooming model of Bonobos that Katrijn mentioned, where you essentially have stores without the complication of inventory, but still offer the in-person experience and the ability to touch and feel. And finally, there's refocus on the customer experience, things like order pickup and order delivery service. And I think if there's one note that gives me some optimism, in retail, as about all aspects of life right now, everyone is forced to adapt to new realities. For example, retail stores are rushing to sort of do order pickup and order delivery services. I think there's lots of experiments happening right now. And when organizations experiment, they also learn. So I think there'll be some profound innovations that come out of this crisis. And I'll stop my remarks there, and I'll yield the floor to Greg MacKinnon.
Thank you very much, Adam, and thanks to everyone else for joining the call today. My name is Greg MacKinnon. I'm Director of Research at the Pension Real Estate Association, or PREA. And in that position, I come at everything, including this question, from the perspective of institutional investors. And for institutional investors, the future of real estate is an important topic. The average North American-based institutional investor has 16% of their real estate portfolio allocated to retail. So it's certainly not the biggest slice of the pie, but it's substantial and it's important. And what happens with retail properties going forward is going to have a major effect on institutional real estate investors. As all the other speakers on the panel have already said, problems are nothing new to retail. A lot of the things have been going on for a while. One of the key issues in the U.S. in particular is we simply are over-retailed. If you look at retail space in terms of square feet per capita, we have 43% more retail space per capita in the U.S. compared to Canada. We have 4 times as much space per capita compared to the U.K., and we have 10 times more space than Germany. So basically, there's just too much physical retail space out there, and at some point, a shakeout was going to come. Now, the question is the COVID-19 pandemic the catalyst for that shakeout? It's had a major effect, obviously, already in retail. Even in April, rent collections at retail properties overall are running at less than 50%, probably a lot less than that in shopping malls, to be honest. CMBS delinquencies are rising for retail properties with mortgages and CMBS. About 10% of retail mortgages and CMBS are running 30 days late. Those numbers are likely to get worse going forward. So the question is, how does this all shake out? And I will also reiterate what has already been said. I'm always suspicious of people that say some brand new paradigm is going to suddenly appear because of some external shock like COVID. What is more likely to happen is that existing trends are going to go through a rapid acceleration, including the rise of e-commerce. One thing I'll say about e-commerce in general, however, is I think a lot of the media stories about e-commerce versus bricks and mortar retail kind of get it a little bit wrong. E-commerce, in my opinion, is not killing bricks and mortar retail. What's killing bricks and mortar retail is just boring stores. Okay? And I say that because if you look at data on consumer attitudes from surveys, what you'll find is people that say they enjoy online shopping are far more likely to say that they enjoy shopping in physical stores as well. And vice versa, people that don't like online shopping typically will say they don't like shopping in stores either. So basically, people that like to shop, and they'll shop online and they'll shop in physical stores as well. The problem is, in general, bricks and mortar physical retail has not done a great job the last few years in creating an attractive alternative to shopping online. So the question is, how do they become more attractive? And Katrijn and Adam have both talked about various ways that physical stores are trying to become more attractive relative to online. One thing, a slightly different trend that I'll talk about for a couple minutes is just the move away from retail properties being pure retail properties and the move towards them becoming more multi-use properties in order to attract more people in. Now, this is more of a long-term trend. So we'll talk about the long-term first, then we'll look at the short-term in a second. There has been, over the last number of years, and again, I think this is going to accelerate because of COVID, a move towards creating multi-use retail properties. And to explain that, the best way to think about it is to think about the history of retail in the U.S. So if you think of when shopping malls first really came to dominance, that was in the 1950s in the U.S. And what did shopping malls replace? Well, shopping malls replaced the old main streets, the downtown centers in towns throughout America. And those town centers of yore had retail outlets. They also had services, so the dentist and the doctor's office and the local accountant, et cetera, were all there. They also had offices. People worked there. They also had apartment buildings, so people lived there. So they were, a walkable, live, work, play kind of environment. Shopping malls came along in the 50s and 60s and really, to a large extent, killed those downtown main streets in terms of being a retail destination. To survive going forward in the longer term, what retail is going to have to do, physical retail, is it's going to have to go back to that. So I like to phrase it as, the future of retail is in the past. So what shopping malls, for instance, are going to have to do is become more like the old town centers. And that process was already underway pre-COVID. And what you had is a lot of projects around the U.S. And around the globe as well, where shopping malls were, first of all, being re-tenanted to put in more services alongside the goods. So dentist office, gyms, theaters, entertainment, diverse restaurants, that sort of thing. But even perhaps more importantly, the addition of attached or adjacent office. so that workers were nearby the mall, and attached or adjacent multifamily, so that people lived there. And the idea is by redeveloping those retail assets into multi-use assets, you create a new type of town center. And there's numerous examples of that having been done and done successfully over the last few years, and it was an increasing trend. And I think what you're going to see is, because of the shakeout in retail due to COVID, you're going to see in the long term that trend really take off a lot. The old traditional style of shopping mall, for example, where you had two anchor department stores at either end and a bunch of inline clothing stores in between, anybody that sticks with that model is going to be dead. Okay? And you're going to have to create an environment that people want to go to. Now, the short term, the problem is that kind of redevelopment takes capital, and Katrijn mentioned this as well. And right now, we're in the midst of the COVID pandemic, and probably for a little while after, there is virtually no capital available for retail redevelopment. Certainly on the debt side, it is almost impossible to get lending done on retail projects, and certainly not for slightly riskier redevelopment of retail assets. On the equity side, surveys we've done at PREA, we did one recently that showed that only 10% of investors said they would consider investing in a shopping mall over the next 6 months. Now, some of those investors wouldn't have invested in shopping malls even prior to this, but if you look just at the investors that would have considered shopping malls pre-COVID, less than 50% would still consider investing in shopping malls over the next 6 months. So there really isn't capital available to redevelop those malls right now, which means certainly for the medium term, the short term and the medium term, what you're going to see is a lot of distress, probably some shuttered malls around the country that are simply too marginal to bother to be saved. That is going to lead to some issues in a lot of communities, especially municipalities that depend on those retail assets as part of their tax base. And with that, I will leave off and invite Mackenzie to come back on and run the rest of the conference.
Thank you to all of our panelists for sharing those thoughts and insights. Just a reminder for our reporters joining us either via webinar or by phone, you are welcome to submit your questions. If you're here with us on webinar, you can submit your questions via the Q&A function at the bottom of your screen. And if you're joining us by phone, you may submit them via email to me, Mackenzie_Bad at Kenan-Flagler.unc.edu. We've got one from Nick Rummel with Courthouse News to kick things off. He says, many companies are concerned about COVID-related lawsuits, both from employees and from customers. What are retailers looking to reopen in states like Georgia and elsewhere doing to minimize that liability? Greg, I'm not sure if that would be one that you would want to take a first stab at.
Well, I can take a stab, and let me answer with a non-answer. That's my favorite kind of thing to say. No one knows exactly what. I mean, I certainly know that all the commercial real estate owners around the country are scrambling to figure out the best way to approach these problems, both in retail and office and other sectors as well. No one quite knows exactly how to proceed because this is a totally unprecedented sort of situation we're in. Obviously, there is very high demand for deep cleaning services. One of the issues that's come up, I certainly know in office, but probably in retail as well, is that sometimes these deep cleaning services can cost more than you're actually charging in rent for the property at this point. So that becomes more difficult to keep up in the long term. My feeling is that we're going to continue, however, to see social distancing and masks required and that sort of thing, within retail outlets, probably beyond the time that the actual regulations are relaxed by the local governments, and that's going to be in response to the potential of any lawsuits that might come down the way. I mean, landlords around the country are certainly trying as best they can, to protect workers, customers, and tenants. No one's exactly sure at this point, the best way to go about that, though.
I was going to make an observation that I think I've seen a lot of retailers recently advertising that they're sort of following CDC guidelines for cleaning their stores. And so I think if I'm a retail operations manager right now, I'm obviously risk averse, and I want to sort of have cover, right? And if I'm following sort of a well-established policy by an authority, then in some sense I've sort of provided myself cover for the activities I'm doing around that space. So obviously retailers, if I'm a grocery retailer, I'm not an expert in infectious diseases, so I'm looking for outside expertise on that.
That's great. Thank you, Greg, and thank you, Adam. And we have our next question is from Aaron Sanchez-Guerra with the News and Observer in Raleigh. A general question to start off with the full group. How might retail in the research triangle specifically change due to this pandemic? I'll open that up for whoever would like to chime in, and then I've got a couple of follow-up questions for a couple of you.
I mean, I think, I'll start. In many ways, the research triangle has, there's no exception here in the sense that we are subject to a lot of the same issues that were brought up sort of on a national basis. If you think about, is our area sort of hit hard or less hard than other areas? I mean, one, that's obviously very close to home for those of us on the call. Universities being shut down is obviously a big deal for, that's one of the main industries in the research triangle. And seeing those shut down is potentially a big blow, certainly to sort of the areas of Durham, Chapel Hill, and Raleigh that are sort of focused around the university.
Yeah, I would also mention that, I don't live in the research triangle, so I'm probably not as expert in this as some of the other people on the call right now. But I will mention specifically that it is a growth area. I mean, it certainly is attracting people, it's attracting capital, investors are interested in the area. And as such, once we're past the crisis phase of the current situation we're in, I think you'll see, relatively speaking, relative to other areas of the country, retail continue to do reasonably well within that area, simply based on the economic growth that the research triangle has seen and the people and the demographics that it's attracting. That doesn't mean it's not going to have its own problems. It's not going to have to adapt, but it will do reasonably well compared to some other parts of the country.
Great, thank you.
Yeah, I think.
Sorry.
Go ahead. Go ahead, Katrijn.
Yeah. So no, I was actually sort of going to add to that. It all depends on disposable income to a certain extent. A couple of things that we've already learning from what's happening in China and other markets that are opening up. And you actually see a very polarized sort of like picture, if you want to. In certain ones, you also see a lot of revenge shopping taking place. You see a rush to do certain luxury type of stores that are reopening. So once again, is that sort of like sensory deprivation type of element that I was talking about? So for people who actually still have full income, they probably have been spending less over the last couple of weeks. And they actually sort of may go out for what we would call revenge shopping. Obviously, the main problem is the people who actually were, sort of technically unemployed, furloughed, those type of things. There you obviously will see a big chunk of their income is completely gone. And that's where you will see. So probably some of the product categories will be less affected. And interestingly, the more upscale you go, the less I think the impact will be. I think the biggest impact will be sort of happening there where you see all everything that touches upon essentials, day-to-day living. There, I think the impact will be bigger.
Yeah, just to sort of echo a couple of things that Katrijn and Greg brought up, I think it's important to keep in mind we're one of the most educated cities in the country. I think we're within the top 5 in terms of shares with a college degree. And so, most of these job losses have been concentrated in the retail and the restaurant industry sector. So that buying power that Katrijn alluded to, that's a big part of our economy. It's not a base product. It's sort of a spin-off industry. So that obviously matters. The average wage in those industries like $13 an hour. It's really low. But I think already you've seen, again, existing trends were that the high-end retail was doing better. Part of that, I think, reflected a little bit that some people do view shopping as leisure. And we've seen this trend in the US of inequality in leisure, just like we've seen inequality in incomes. We've seen increasing trends with higher income, more educated workers having more leisure time. And to the extent we have more of those higher income as well as young workers, so Greg, we're growing, and who we've been growing with, kind of young, well-educated people, and those people are going to be less affected. I would also point out I mean, this is not to say things won't be bad in the triangle. Things are going to be bad everywhere. I don't want to underestimate that. But I would also say that we don't have the density of a lot of places, right? So that helps us out in terms of already where our stores are a little bit better set up, our retail stores, to allow for some social distancing.
Great, thank you all for those contributions. Some follow-up questions from Aaron at the NNO. First is for Katrijn. Has COVID-19 irreparably streamlined the Amazonification of our retail and grocery world?
So obviously it's an interesting one because online grocery shopping has been lagging dramatically any other type of product category. I think you all know that. So what we do have now, and that is something that we see across the globe, if you look at the first numbers, lots of people now have tried online grocery shopping for the very first time. So what does that mean? When you try something, you adopt something, that is a potential for repeat. So part of that will stick. So that is one thing that we know. The question is that something that who will benefit from that? Let's not forget, the Krogers of the world have been trying to sort of jumpstart their online grocery operations for years, and it hasn't worked out. This may actually sort of like help them out to sort of like further sort of like kickstart that and sort of nicely integrate it with their store operations. So to a certain extent, it may not necessarily just benefit the classic Amazon type of models of the world, but I do think that also Kroger, who was actually sort of like seeing a complete revival, and obviously that revival is short term, but then once again, because of the new behavior that is being learned and adopted, they may also benefit from that in the longer term. Once again, they may not necessarily sort of lose that part to the Amazons. So once again, I think this may be a part that they, if they do it right, may help them. Because let's not forget, and that is something that I think we've all experienced, Amazon was having quite a lot of troubles, and actually this is sort of more Adam's expertise in sort of getting a lot of products to you, yeah, because they have to ship from larger distribution centers. It takes them more time. Supermarkets, once again, the classic retailers, they can actually do everything in a much shorter time span. Once again, it's that entire idea of having a store as a mini fulfillment type of center. So once again, I think something that may happen, yes, online sales are going up, but it may not necessarily only benefit the classic online players. If that answers the question.
That's great. Thank you so much, Katrijn. The second follow-up from Aaron is for you, Adam, and it's two-part. The first part is, how will supply chains change after COVID-19 continues to infect meat processing plants and ag workers in the U.S.? And the second part is, what is one aggressive innovation that retailers might come up with in the new competitive market that may be here to stay?
All right, great. Those are good questions. The meat supply chain is one that I think is interesting because so what we're seeing right now is because of health concerns and some outbreaks, some of the meat processing plants are shutting down, which if you think of the meat processing plant, it's really in the middle of a supply chain, right? So on the one hand, we have consumers who eat meat and are sort of looking to buy it at the grocery store. On the other hand, you have producers. And my understanding, I'm not an expert in this, my understanding is that like they sort of need this processing capacity. So there's, hogs, for example, become a certain size and they really need to go to the slaughterhouse at that point. And so this is sort of impacted things from both sides. I obviously don't know the solution to this. I think we could see prices going up and some shortages and things like that. But I think one thing you might see is some sort of circumventing of this processing, right? So, for example, the idea that like it may be harder to find skinless, boneless chicken breasts in the store, but you can buy whole chickens, right? Or maybe more of the butchering happens in the back of the store. And things like that. So this, I have a feeling that like if people are eating meat and meat is still being produced on the farms, that we will find a way. But there may be some rockiness there. On the other question, or remind me of the other question, Mackenzie. I apologize.
No problem. It is, what is one aggressive innovation that retailers might come up with in the new competitive market?
Yeah. So Katrijn touched on this a little bit. I think this. This last mile problem is one that, there's a long history of this last mile problem. So going back to the early 2000s, there was a company called Webvan, which was very high. It was one of the high profile players in the e-commerce boom. And they had billions of dollars of venture capital money, and they basically burned through all of it. Essentially, I think my view is that they kind of didn't really understand the last mile problem. And so there's the picking side, which is really hard, right? If you imagine an Amazon warehouse, how huge it is, I have to now bring, my order may have 3 or 4 different categories of products that all have to come together. And then there's the delivery part of it, which really requires some economies of scale, right? So if you think about an Amazon delivery truck, if they have to drive all the way from their warehouse to your house and then back, that's a big waste of resources. However, if they can come to your house and visit all the houses on the block, suddenly this makes economic sense. On the one hand, brick and mortar retailers are at a disadvantage because Amazon's been working on this for 20 years, right? On the other hand, they have an advantage, which is they already have like boots on the ground sort of in the local area, right? So Katrijn mentioned like using the store as a sort of a mini distribution center. If retailers can sort of figure out how to do this well, the pickup from store model sort of may really take off from this. And if we can figure out ways to sort of automate this to some extent or sort of make it smoother. Right now, we're substituting a lot of labor to make this happen, but there may be ways to sort of automate this and sort of make this a much smoother process. And I could see that sort of taking off, both on the demand and the sort of ability to provide that service.
Excellent.
And if I can just add on to that briefly, and the whole idea about that, Katrijn have discussed about physical stores being basically part of the logistics process, overcoming that last mile delivery problem. The other thing that comes in that's sometimes overlooked is it can be a very important part of the reverse logistics process. In other words, returns. So if I think of the retail properties I visit the most, the only one I go to regularly other than the grocery store is a little strip mall that I pass on the way home from work that has a UPS store in it. Because every time I order 3 different sizes on Zappos and have to send 2 back, I just wrap them up and I drop into that place and put them in the UPS. So physical retail being able to serve as both the delivery point, but also the return point, I think can make that retail asset more valuable overall.
Absolutely. As someone who now has a former music room that's now dedicated to items to be returned, I definitely agree with that. Our next question comes from Katya with Bloomberg News. It's a 3-part question and it's for the group. She says, can you speak to the specific challenges in clothing retail, i.e. changes to seasons, trade shows, etc.? How do you see the clothing consumer changing with spending decisions and just overall spending? And what are some potential pivots to get consumers in the post-COVID-19 world, maybe more online or social media marketing, for example, she says? So we'll start with the first question. Can you speak to the specific changes in clothing retail, such as seasons and trade shows? We'll start with
that. So I touched on a little bit in my remarks. The one advantage of these vertically integrated retailers. So when I say vertically integrated, I mean these are retailers that sort of own their factories, kind of own their whole supply chain. Is that they essentially kind of circumvent a lot of this sort of this kind of commercial aspect of it, right? So they don't have the trade shows and things like that. They don't have to get approval from their retailer to design things, and this actually shortens. I think one of the studies I saw, this shortens their sort of design to store time by something like 15 or 16 weeks, right? And so that's very significant. That's in terms of responsiveness. So I think that's one area that we may see sort of more impulse to sort of have this sort of more tightly controlled supply chains. And I'll stop there and let others chime in.
Yeah, I guess I would just point out I'm more bullish on the luxury segment, not just because of this leisure issue that they have, but I think it's also important to keep in mind that in terms of who can work from home, who can still be productive, these are largely, again, skilled workers. So to the extent that we are at home for a long time, this especially hurts these lower income workers. So again, these essentials, you might think, oh, everybody still buys these essentials, but the workers that are going to be worst hit that's always true in recessions, that recessions disproportionately impact lower income workers, but it's going to be even more true in this recession, given the source of the recession. So the one thing obviously that I think has to keep changing is children's clothes. Those kids keep growing. But I think a lot of other adult consumers of clothing they may put off a lot of non-essential buying, except maybe gym clothes. People seem to be going to the gym a little bit more, so that might help a bit.
They're going to the gym or spending more time in athleisure, like I am.
Yeah.
I did see one, just as sort of tongue in cheek, but I saw that of the retail sectors, things you wear on the top are in higher demand than things you wear on the bottom. So, which is all because of Zoom calls like this. Yes.
Yeah.
That's exactly right. I'll leave it at that, but I think that that's true.
Yeah. Not going to the gym, working out at home.
Exactly. Or just lounging on the couch. It's good to be comfortable. So the second part of her question, just to refresh, is how do you see the clothing consumer changing with spending decisions and just overall spending? Andra, I think you kind of started to touch on that, but Katrijn, did you want to jump in?
So I can actually sort of continue with that. So what you do see, and let me sort of start, what is the problem here? Typically, when you have these type of crises, people look at what happened in past recessions. And there the problem is that it may not neatly translate to what is going on here. So once again, that's what Andra also once again said, is that not everybody is affected in the same way when it financially. The other element is fear, of course. That is something that is quite unprecedented. We are just afraid of the touch and feel, and touch and feel is a very important aspect of clothing purchases. Yes, you can do it online, but no, it's not as fun. If you're into those type of shoppings, type of experiences. And also it's much harder to sort of come up with the best possible option that you would prefer. It's all much harder. So you also actually have a lot more returns. So once again, retailers will also have a vested interest in trying to get people back to the store, because once again, don't forget, impulse is something they need and they cannot sort of get to that online. However, how are you going to address that? How are you going to deal with a consumer that is actually just purely, literally germphobic? So you will have to help them, because fitting is going to be an issue and everybody's trying to see how they can get around that. There is technology available, so probably you will also see in the short to medium term a lot more investment going on in everything that touches upon these smart mirrors and things like that. Also, and that fits in with part of the things I've been talking about before, taking more product from the store floor, removing it from the inventory from the store floor, creating more space to sort of, once again, we do need it for our social distancing practices, but then also once again to let people experience the product in a different way. Other things that have been suggested, once again, to allow you to play around with products rather than just, touching it and trying them, is everything that is borders on AR type of technology, so augmented reality, trying to see what things look like without you having to touch them, without somebody having to sort of get them out of stock and getting them from a rack. So those things are things that are being suggested. So it will take a while, and the things I'm talking about cannot sort of be implemented overnight if you haven't done it. But once again, that is something where you will see that they will become even more important over the next couple of months, years, probably. And yes, once again, it will be about making sure that you actually get people over their fear, especially those people who already still have the disposable income to shop. So.
That's great. And that kind of touches on the third part of her question, but you may want to expound on this a bit further, Katrijn. The third part is, and this is the last part of the question that we'll have time for today, but just to wrap us up, what are some potential pivots to get consumers in the post-COVID-19 world where there need to be more online, more social media, more marketing? Do you see that being an increased need for retailers?
So there are a couple of trends here. So on the one hand, one of the things that you see is that when you look at grocery, one of the expenses that is virtually dropping is everything that touches upon price promotions. I'm not sure whether you're aware of it, but typically lots of retailers, brand manufacturers, they spend tons of their budgets on price promotions. At this point in time, they just stopped. So they may have disposable budget there to sort of focus on other things. Obviously, everything will have to be geared towards, safety and making sure that people trust you, because that is still the main problem. Everything that touches upon touchless technology will become important, whether that is payment, whether that is, as I was describing before, interacting with product. That is something that will need to be done. So once again, these things, and this is just a little side note, may have a cost in the longer run, because once again, what is happening, you're creating models where now we actually need to persuade people to come to the store, and we have to persuade them that it won't take any time, you won't have to touch anything. But once again, and I cannot repeat it often enough, the long-term cost will be that you actually sort of create a more rational type of shopper, a shopper who spends less time in the store, who is less inclined to sort of like react on impulses, who doesn't want to sort of consider unplanned type of purchases. Once again, from a retail point of view, that may actually sort of create a challenge, because once again, big chunk of your revenues is sort of made through all kinds of unplanned and impulse type of shopping experiences. So once again, short-term solutions may lead to longer-term type of challenges, but they will be needed to sort of once again make sure that people trust you.
Absolutely. Thank you so much, Katrijn. And thank you so much to all of our panelists. I know we're just a minute or two over time here, so we're going to wrap things up. I'm sorry we didn't get to all of the questions that were submitted today. If you are interested in continuing the conversation with any of our experts, you are welcome to reach out to me directly, and I'll be happy to make those connections. And of course, as always, as much as we can, we'd love to support your coverage. So if there are additional resources or references that we can support you with, please reach out and we'll be happy to provide those as well. And thank you so much. We hope to see you next Tuesday. We'll be doing it again next Tuesday at 11 a.m. Eastern. Hope you can join us again then. Until then, take good care and stay safe.